Hello, everybody. This is Jonathan Tran from Paramec Financial, and with finance in 5 to 10 minutes. Today is the closing of our business life insurance topic, and we're going to talk about executive bonus. I love this topic because a lot of times when we work for somebody or we own our own company, if you work for somebody, you're looking for how do you get more benefits out of your company besides just your health care, besides just the group plans while you're still working with them, but how can you have something that you can take with you when you retire, right? One of the things that they give to us is a 401k plan. Money that you put into your 401k, when you build it up long enough, and when you retire, you should have a nice little nest egg so that you can so-called retire. But the retirement plan, a lot of times there's limitations on how much you can put into the retirement plan. And what if you want to save more and still have some form of tax benefit? So life insurance is another way that a business can offer to an employee a supplemental retirement account in the form of life insurance. So they call it executive bonus plans. Now, a lot of times they don't always want to offer this to everybody. They only offer it to key employees or very executives of the company, someone who they value, that they want to retain talent, or could be that they want to recruit talent too. Like we mentioned that before, is either we're trying to retain or recruit. Basically how it works is that the company will buy the life insurance policy with the life insurance company, and that's for the employee, and the benefits goes to the employee's family. Now, when you structure it like this, because the company is paying for it for the employee, it becomes a form of compensation to the employee. So that means that when you receive compensation from your company to your employee has to pay taxes on that. Now, a special way that we can structure it for you when you're working with the company to the employee is that the company can pay the taxes on that money there. So say, for example, you have $5,000 bonus that you're going to pay to your employee. So your employee has to pay taxes on that $5,000 going into this life insurance. But what the company can do is just say, assuming that you are in a 20% tax bracket, then the company will pay you $6,000 instead of $5,000 so that they can cover that $1,000 tax for you. So in a sense, the company gets a write-off on that as well, right? So you get a write-off as a business owner. Employee gets a policy that is growing for their retirement, and the money that's growing in this account, if something happens to the employee, untimely death, benefit will be paid for the beneficiaries. If you design the plan with more benefits, such as if you get sick or disabled and you want to get like a long-term care benefit out of it, you can do that as well, right? And then over 20 years, for example, if they put $5,000 into this policy for their employee could have estimated about $200,000 in their account when they retire, in addition to their 401k plan. So this is a very, very powerful tool so that you can make your employees very happy and recruit them. Some companies even use the executive bonus plan called a restrictive executive bonus plan, a REBA, where they will say, hey, you know what, we like you, but we're afraid that you might go to another company. So they do what they call golden handcuff to hold that person from leaving the company so that they can retain this benefit. So it could be that, hey, you know what, if you stay with us for the next 5 years, as long as you stay with us 5 years, you'll be vested in this policy. If you don't, then you can't keep the policy, right? So it kind of protects the company as well. So in case that person tries to leave before their contract date or their vesting schedule is up, there's some protection there for the business. So executive bonus plan, again, it's for the company buying for the employee, and the employee gets to keep it. A great retention tool, great recruitment tool. It's just another way that you can help an employee have more protection for their self and their family, and also get a supplemental retirement account through growing that money through the life insurance. And that money growing through the life insurance, they don't have to pay the taxes on the interest to the policy. And if they design it right and do it the right way, potentially they don't never have to pay any taxes on it at all, right? So very good to discuss with your advisor. These 3 types of business life insurance, and also your lawyer as well, is again, it's the key person life insurance, buy-sell agreement, and the executive bonus plans. Amongst there's 7 other ones that we could use, but these are the 3 main ones. And if you have questions about the other 7 and you want to know more, then shoot us a comment below, follow us, like us. Let us know if you want to learn more about business life insurance. I'll be happy to go into more detail about that. But those are the 3 main ones. So I hope you guys like this series on business life insurance. I hope you guys learned a lot. And thank you for your time. Bye-bye.